Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today I want to look at some tech-related ETFs because we still got modest pullbacks, but we don't see that little breakout catalyst that we're looking for to end the pullback. And I'll show you what to look for. And then there are some signs of serious concern in the market because we got extended declines or downtrends in retail, housing, steel, and the industrials SPDR. So before we look at XLK and XLC, I just want to show you the weightings of the sectors in the S&P 500 SPDR and the S&P 500 by extension. I'm on the State Street Global Advisors SPDR website. This is the fund family for SPY. And so they're going to have the most recent data as far as holdings and weightings and all that is concerned. So there you can see the individual stocks, and we can see Apple, Microsoft, Amazon, Alphabet, Google, and Facebook are the top holdings. And Tesla is just below 2%. Tesla's been quite the performer lately. And then if we look at the individual sector allocations here, look at that. Information technology, 27.5%, and communication services, 11.3%. So together, these two are almost 39% of the S&P 500. And so that is why these two sectors are still 800-pound gorillas in the S&P 500 right now, and they pretty much dictate what is going to happen to the S&P 500. So keep that in mind when we look at XLK and XLC next. So I'm here on Stock Charts ACP, and I've got one of the indicators from the Trend Investor Pro Indicator Edge plugin in the middle there. That is the Momentum Composite. And on the lower right, you see the plugin icon there, and you can click that to learn more about this plugin and the indicators available. And what this does is it aggregates the signals in 5 momentum oscillators, and you can see those on the left or read about them in the plugin. And what I'm looking for is basically a majority, a consensus that the majority are oversold, like 3 of the 5 are oversold to suggest we have an oversold condition that might be worthy of a mean reversion bounce. And so if we go through this chart here, you can see we didn't become oversold in September 2020 when we had that pretty sharp decline, but we did in October, and that gave way late October 2020, and that, of course, gave way to the big surge that started it all. So we got to -3 here in early March a couple times and then bounced there on the price chart. We got to -3 in early May, had a little bounce, and then another drop. So that -3 level doesn't always give you the first bounce. Sometimes you get a second dip, and that's what we're seeing now. So if you go forward there, you can see we became oversold in the middle of September on the 17th and the 20th, roughly, and we got a little bounce, but then we fell back. And so I'm going to open up this chart, but before I do, I think that this decline is more similar to the September decline than these other ones, because look at the extensive oversold conditions there. In other words, this is the most oversold XLK has been in over a year. And those oversold conditions tell you that downside pressure was pretty strong in late September and into early October. Actually, it's just late September there. And so that tells me that maybe we're going to have a more extended correction. And if that happens, that's going to weigh on the broader market because of XLK's weighting. Now, as far as these triggers are concerned, you can see, I'm going to put the crosshairs back on. So here we're oversold. We got 2 -4 readings, and then we get a Stochk RSI pop. Now, traditionally, that's your little bullish tell that, hey, okay, we've turned the corner short term, and we're going to rally again. But this one failed with that move lower. Not all mean reversion bounces are going to work. Not all trading signals are going to work. And so we got oversold again, and now we're waiting for another momentum pop. And if you look here, You can see we've got 2 inside days brewing here, and that means we have a clear resistance level to watch. If we can make it above the high of the last 3 days, then that's going to be a short-term bullish breakout, and that could give way to a mean reversion bounce. So if we look at XLC here, I'm going to open up this chart a little bit so we can see that September 2020 decline. So here's the first decline on the price chart. And if you look at September 2020, it's kind of similar, it's pretty steep. And after that decline, we got a little bit of bounce and then a pullback into late October. And then there was the breakout surge. And overall, we had a lot of triangle formations take shape there in September and October, and there were clear triangle breakouts. So this decline looks similar in depth to that September 2020 decline on the price chart. So maybe we get a bounce and another test or a falling wedge. Now, as far as timing this first bounce, this oversold bounce, what I'm going to do is look at the oversold composite and Stochh RSI. So we got 3 days with -4, so we're oversold, and we got a little Stochh RSI pop, but we fell back, and we're getting more Stochh RSI pops here in the lower window above 0.80. When you go above 0.80, that shows a little momentum pop that can sometimes foreshadow a trend change. But if we look at the actual price action, we can see that there's a bit of a falling wedge taking shape on the price chart, and that wedge is still falling. So you can see Tuesday's high there, and we need to break above Tuesday's high to get out of that wedge and to actually reverse this decline here and get an oversold bounce going. Now, there are a number of tech-related ETFs with similar situations in that they've been kind of leading the market down since that early September high. So that is a bit of a concern, but if you look at the pullback, it's still relatively tame. I mean, you had these massive advances. This is IGV. So you have this massive advance, and now we get our first pullback here. And what I'm noticing is you can see this black candlestick, and then you got the 2 white candlesticks inside days. Well, if you look back at that May low, you had a long white candlestick and then 2 smaller black like spinning top candlesticks, 2 inside days as well. And then you got the breakout. And, a little throwback after that first attempt, but then the gap and the race was on. So with these 2 inside days, it's basically a harami. And if you get a breakout there, that is going to be bullish there for IGV. Now, as far as other ETFs are concerned, we got CIBR, which is the cybersecurity ETF. And there you can see the 2 inside days as well. So we've got a harami working, and we need to get a breakout of that harami to reverse that slide. And if you look at May, there you can see the harami as well. If we look at the First Trust Internet ETF, we can see a similar thing. Whoops, got to get that symbol right. There we go. There you can see the 2 harami. So the harami basically shows a sharp decline. That's the long black candlestick. And then a sudden indecision, because price action for the very next day is inside the high and low, or the open and close, actually, in this case, of the price action from that previous day. So you got indecision for 2 days, and indecision can sometimes foreshadow reversal, but harami are candlesticks that require confirmation. So you need to get a breakout and preferably a close above the high of this black candlestick. So if you go back to May, you can see there's the long white candlestick, and then we have the 2 inside days, the harami. Well, the 2 bodies were inside, and then the breakout. So now we've got 2 inside days, and we need to get a breakout there to reverse that downtrend, that short-term downtrend. So here's a peek at trendinvestorpro.com. This is the main analysis page where you can find all the current articles, and there's a few free articles sprinkled in there. But on Friday, I was looking at oil following through on its channel breakout, bonds breaking down, and gold getting an oversold bounce based on that momentum composite indicator. But what I want to show you is something from last week, and I showed it last week as well in this video, is this Zweig breadth thrust. And my concern here is that the market has basically gotten a bloody nose. The bulls have gotten a bloody nose. And the reason I say that is because this wide breadth indicator moved below 0.40, which is the red line there on the histogram. And this wide breadth indicator is advances divided by advances plus declines. So when you get a really low number of advances, it goes below 0.40. And this is for the S&P 500, not the New York Stock Exchange, for S&P 500 stocks. And so you can see the red arrows on the price chart show when you get that move below 0.40. And we can get a corrective process sometimes when we get these red arrows. And you can see we got a red arrow or a move below 0.40 in late February 2020. But what it does is it provides the setup for a bullish thrust. And so when you get that red arrow, you say, okay, I'm not going to take any new positions. I'm just going to wait until I get a bullish breadth thrust. And that's the green arrow when you get a move above 0.615. And that's when those bars on the histogram turn green. And so we got one of those in late May 2020. Took a while, but it was still timely. And now you can see we got that move below 0.40 in mid-September, and we have yet to counter that with a surge above 0.615, which is what I'll be looking for in the coming weeks to suggest that the correction has ended. So check out trendinvestorpro.com if you want to know more about this and our other trend following strategy. So even though the pullback in those technology-related ETFs still looks relatively tame, so to speak, if you look at some of the price action for some other key groups, it's not very encouraging for the broader market. Now, this is the equal weight consumer discretionary SPDR RCD, and so it takes out that Amazon and Tesla effect that you have in XLY. So you can see it peaked way back here in May, didn't exceed the May high here in August, September. And if we look at these two trend indicators that are part of that Trend Investor Pro indicator edge plugin, they're still green, they're still bullish. But if I look within this ETF, if you look at XRT, the retail SPDR, it peaked back here in June, and it is breaking down. And you can see those two trend indicators turned red. So it's got a downtrend. Retail. Housing, we look at ITB. It peaked way back here in May, a lower high in August, September there. And look at that decline in September. And you can see those two trend indicators turning down. So I think that's a negative for the market. And then we look at steel. You know, steel is the backbone of the infrastructure economy. It's part of China as well, the China story. SLX peaked back here back in May as well. Slightly lower high there in August. And the trend indicators are down. And one more would be XLI Industrials is bearish because those trend indicators turned down. So these are the worrying parts of the market. And if technology continues its correction, we could see a deeper correction to the 200-day for the S&P 500. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.